Hey friends, Dr. Holly here from ChiroNumbers.com, understanding your financial statements. We are continuing on this series where we are trying to understand a little bit more about those financial reports. So I've already talked to you a little bit about just the basics. Profit and loss statement, balance sheet. We need both of those sort of like opposing views to be able to get a good picture, clear picture of what's going on with your financial history. And then I also talked a little bit about we don't want to get analysis paralysis and getting stuck in those reports. We do want to make sure we're tying in your potential, your growth, your goals with how we can control essentially what is happening in your business. Okay, so a couple things I wanted to make sure that I pointed out to you that we don't see on the profit and loss statement. This will vary a little bit depending on what your business entity is and how you actually compensate yourself as the owner of your business. But it's potential that you will not actually see any draws or owner's distributions that you take from your business if you are taxed as an S Corp, if you're taxed as a sole prop, which is typically what a single member LLC is taxed as. If you are not an S Corp, you are not on payroll, so you do not have taxes taken out. You will not see that on your profit and loss statement. Now, if you are technically an employee of your business and that is run through payroll, you will see that on your profit and loss statement, okay? So it's important to remember if you see this huge, gigantic profit on the bottom of your report and you know you're not on payroll and you know you took money out of the business and that profit's not still sitting in the bank account, it's probably because you took it in draws, and we would see that on accumulation on the balance sheet for how much you've taken out in that owner's draw, okay? Other thing is debt and then also asset depreciation. So anytime you spend on debt, essentially say you have a credit card and you have some ongoing expenses, okay, those expenses are going to be cataloged when they come in, when the charges come in real time, they're going to be dropped into those categories on your expense report. But when you actually take the cash out and then go pay said credit card company, that would be a duplication if we would see that on the profit and loss statement. So you will not see that there. Very similarly, if you have a startup loan or some other long-term liability, maybe an asset loan where you finance something, you will not see that come out. While it is a monthly expense for you, you will not see that come out on the profit and loss because that's just you paying the debt servicer. Okay, so again, we will see that balance, that liability over on the balance sheet rather than in the regular ongoing expenses on the profit and loss statement. Okay. Last one there, that might be a little confusing for you, is depreciation. If you buy a big piece of equipment or a large asset, your tax professional will most likely depreciate that cost over several years. Okay, so say you spend $10,000 on something, you're not going to get a $10,000 tax write-off most likely in that first year that you bought it. We're going to equalize that out over a period of time, say 5, 7, 10 years, up to your tax professional and their guidelines on how they want to write that up. So it will come off of your taxes. It will reduce your tax liability at the end of the year. But again, it's not something we're going to be seeing on that profit and loss statement. Okay. So it's not always 1 + 1 = 2 or 1 - 1 = 0. Okay. So it's really, really important to work with a qualified tax professional to advise you on, when to buy things and when not to buy things. And how to compensate yourself and how to make sure that you are appropriately planning for self-employment tax, income taxes, etc. Okay, so we've got just another minute and a half. So this is an example of what a redacted profit and loss statement looks like. Okay, so probably pretty small for you on the screen, but just to get a flavor of, hey, what's this report going to look like? You're going to see all of your income up at the top. Okay, I've got this business has some breakdown in how they actually the types of revenue that they generate in their business. The level of detail I find is pretty important and intuitive, especially when you're comparing periods over periods or years over years. If your business starts to evolve, starts to have more service offerings, you kind of want to test the profitability of different service line items. It's good to have a level of detail here within your accounting software like QuickBooks. Okay. Now, if it creates way too much of a workflow to break things down, then by all means, we just need to sort of come up with a workaround that's going to make it easy for you and or your bookkeeping staff, et cetera, to make sure this is both intuitive and not a duplication of efforts. Okay, so we can see here for this practice, they've broken down their insurance, they've broken down fee for service, cash self-pay, and patient payments, that sort of thing. So we've broken down at least where the mix comes from their revenue. And then as we work our way down, we have to subtract out any refunds, cost of goods sold. So if you sell any sort of thing that you keep an inventory on actually in your office, that will show up here because it's considered an asset on your balance sheet but it's considered a cost when we subtract out how much you actually spent for the ones you actually moved off the shelves. Okay, so we see that cost here. And then down here, this category spilling over into the next page are all of the different types of expenses. Again, level of detail is important here because if it's not intuitive to you, you don't feel like you can change it if you don't understand these reports. Okay, so make sure that you have a qualified financial professional help you to set up your QuickBooks account from the very beginning. And then you can always make tweaks and changes to it as you want to grow and evolve that level of detail. Okay, so for example, instead of just having one big insurance expense category, this office has a key man policy, work comp, liability, malpractice, and then employee insurance. Okay, so we can break down, again, that level of detail. If it were just one big category, when we go to run an expense audit, we might not really be able to really fully realize where can we save some money or cut some costs here or make some edits, that sort of thing, if we don't have that level of detail and be able to actually see how that's broken out. Again, here, advertising, marketing, promotions, those are things you want to make sure that you can track and have a return on investment. So it's nice to have that level of detail to say, hey, some of that was signage, it's not an every year expense. Some of that was for patient education materials. Some of that was actual print advertising, it was online advertising. It was a firm that we paid to manage the whole thing. Like, you want to be able to break that down. Again, so year over year, you can track your progress and really be able to sort of key back into what works and what didn't work. All right, so right on time, 5 Minute Fridays, over 5 minutes, but I hope this is helpful for you.